Interest refers to the charges imposed by the Income Tax Department for defaults or delays in tax payments, as well as the compensation they pay to you for a delay in issuing a tax refund. There are two main types of interest: interest payable by the taxpayer to the government. Interest payable by the government to the taxpayer. 1. Interest payable by the taxpayer, sections 234A, 234B, and 234C. This is a penalty for non-compliance with tax payment deadlines. It's a simple interest, typically charged at a rate of 1% per month or part of a month. Section 234A, for delay in filing ITR. When it applies, if you file your income tax return, ITR, after the due date. How it's calculated: interest is charged at 1% per month on the unpaid tax amount. The period of calculation starts from the day after the due date for filing the return and ends on the date the return is actually filed. Section 234B, for default in advance tax. When it applies, if your total tax payable is 10,000 rupees or more, and you fail to pay advance tax, or the advance tax you've paid is less than 90% of your total tax liability. How it's calculated: interest is charged at 1% per month on the shortfall amount. The period of calculation starts from April 1st of the assessment year until the date you actually pay the tax. Section 234C, for deferment of advance tax installments. When it applies, if you fail to pay your advance tax installments in the correct proportion by their respective due dates, June 15th, September 15th, December 15th, and March 15th. How it's calculated: interest is charged at 1% per month on the shortfall for each missed installment. 2. Interest payable by the government, section 244A. This is compensation for a taxpayer if the Income Tax Department delays in issuing a tax refund. When it applies, if a refund is due to you because you've paid more tax than your final liability, e.g., through excess TDS, advance tax, or self-assessment tax. How it's calculated: interest is paid at a simple rate of 0.5% per month on the refund amount. When it starts, the interest period typically starts from April 1st of the assessment year, if you filed your ITR on time, until the date the refund is granted. Taxability: any interest you receive on your tax refund is taxable and must be reported as income from other sources in your tax return for the year it's received.